All right, everyone. Welcome to this edition of Shirley Talk. I am Mike Mulrooney.
I'm Kelly Duckworth.
And today we have Mr. Shane O'Keefe with us. And today we're going to talk about insurance because it's a myth. I don't know to say if a myth, but it's very confusing to people for any reason. And obviously ours is cancer. But before we get started, we start this every time. Kelly, you a doctor?
Nope.
Yeah, I'm not either. You a nurse?
Nope.
EMT?
Nope.
Psychologist?
Nope.
You need to be a little bit of a psychiatrist to deal with me on a regular basis.
I was going to say the same thing.
So, all right, this is for entertainment, educational purposes only. We do this to help people, educate people on what we hear and see in the world. And again, it's if you hear something, don't take it gospel from us. Shane is a professional in the insurance world, but look it up, ask your person, or give Shane a call. We'll put his info on the podcast so you can reach out to him and talk about your insurance needs. So Shane, thanks for coming in today.
Thanks for having me.
What's the name of your company?
We Care Kentucky.
And I ask you like that. I don't know what it is. You're on the board of Shirley's Way. So I knew that. I just wanted to get it out there.
That was a trick question. So
Yeah.
I got it right.
Yeah, that's right. WeCareKentucky.com, right?
Yes.
Yeah. So, but insurance is confusing. I work a regular job and I've had insurance through my employer. Kelly, you're insured, right?
Yep, through my husband's.
Okay, so
Yeah.
you got corporate insurance as well. Is that a thing that's probably going to go away one day, in your opinion, do you think?
No,
You don't see employers saying it's costing us too much? And
it may actually.
Yeah.
If the government does the health care for all,
Yeah.
employees can just opt out. They don't have to cover
Mhm.
their people if they don't want to cover their people. I tell you what, if you have an employee that does offer you coverage, it's expensive.
Yeah.
And that means they're really taking care of their employees. I hear people always complaining, not always, but people complain about their group coverage. And if they only knew the cost that it costs that employee, they may think
you mean
twice.
the employer? Yeah,
The
what it
employer,
costs the employer. Yeah, because a lot of your larger employers are probably private. They're covering a lot of the cost of the care for their employees, I would imagine. I know
Correct.
where I work, it's supplemented to some point. They kind of cover most of it.
Yeah, they'll cover most of yours. They
Yeah.
may not do that much or very well in your family,
Right.
but they do the employee itself.
So count that as a blessing.
Yes.
Yeah, because
Definitely.
I've seen what it costs per person where I work, and yeah, you're right. It's very expensive for what they pay. But you hear people all the time saying, "I'm covered through my current job, and I can't leave because I've got really good insurance," or "I'm working this job because I have insurance," or "I want to retire, but I can't because I can't afford insurance." Is insurance really that expensive? If I didn't have insurance through our employers, I mean, what am I looking at? Is it based on age or?
Since Obamacare started in 2013, which is when I started the Obamacare process as well. So I've been doing it for that many years. I've been doing it for 10 years, but the Obamacare started about 8 years ago.
Right.
Affordable Care Act, let's
Right.
call it that.
Right. Yeah. Yeah.
So since that happened, they use family income, whatever your family income is, how many people are in the household, your zip code, believe it or not. And then they tally all that, and then that's how they offer plans. So back in 2013, there was only 2, maybe 3 carriers. And in 2014, there were 5. 2016, there were 6 or 7. And then it went down from there where now we only have 2 carriers to help cover people in the whole state of Kentucky.
Wow. Is that a
Now-
monopoly? Close to it?
Close to it, yeah.
A duopoly, I guess you could call it.
Duopoly.
Two companies, so they can kind of price it and charge whatever they want, it sounds like.
Correct.
Yeah.
And the thing is that it's not all counties. We have 120 counties here in Kentucky, and not all of them have 2 carriers. Some of them only have 1. Meade County, for example, last year only had 1 carrier. Now they have 2. So we had an expansion year this year.
To me, that's a problem.
It
doesn't create competition like the capital market should.
Right.
I mean, you should have competition to where at least there's 4 to 5 or 6 to where, they have a reason to reduce their costs, but they're not going to if they don't have to.
Correct.
So how does Obamacare come into that? So if you can't get coverage through one of those 2 people, you can go get it on a different exchange, I guess. Is that the right wording?
There is no different exchange. You only have 1 exchange and you have 2 carriers.
So does Affordable Care Act become the third carrier, or is that, I don't understand how that works.
So you got the Affordable Care Act, which is considered the marketplace.
Okay.
And then you have the two carriers inside of that. So those are the only two carriers that you can choose from if you're sick.
Okay.
Okay. So I said they based on income. Okay. If you get subsidies or payment assistance, you're going to want to stay in Obamacare or into the Affordable Care Act in the marketplace. And the reason why is because you get payment assistance. It helps with your health insurance cost.
Okay.
So your question, as far as leaving your job or going to another job or something like that, it all depends on what you make or what you think you're going to make in the future.
And your zip code.
In your zip code. And how many people you have in your family. So, for example, if you're in your 30s or 40s, if you make over $40,000, you're not going to get any payment assistance. So you're going to pay full price for that health insurance. If you have a family of two and you make over $65,000, if you're in your 30s and 40s, you're not going to get a lot of help. You may get $100 or so. But if you're in your 50s or 60s, under $65,000, you may get $1,000 a month in health insurance and payment assistance
from the government.
From the government. So the customer's only paying a couple $100. And that's where people like self-employed people, they don't understand. You take your net income on your self-employed, you take your gross when you're not self-employed. So self-employed people, they think they make too much money, but really after write-offs, they don't. And they get a lot of help from the government to help pay for their health insurance. Problem is, if you have a person making or two people making $65,000 a year, they get $1,000 in payment assistance. So their health insurance that was, let's say they're 55. Their health insurance would be $1,000 a month. They get $1,000 a month for payment assistance. They have $0 premium. That's not bad.
Yeah.
It's free.
Yeah.
It's not bad at all. Of course, you got a high deductible and things of that nature. If you make $65,001, you pay $1,000 a month in health insurance.
So there's no incentive to try and earn additional money. Got to get a little closer. You're usually loud, so
my mouth's getting dry.
There you go. But I mean, there's no incentive to make more money.
Correct.
Wow. So that's incredible.
Yeah.
So we have all these systems, but if you try to better yourself, you're not helping yourself.
Correct.
Well, and didn't something come into effect a couple of years ago, like, for example, self-employed people that didn't have insurance? Wasn't there a penalty or something on your taxes if you didn't have health insurance?
For everybody, yeah. Everybody, if you didn't have health insurance, then
that was part of the Affordable Care Act, right?
That was part of the Affordable
Care
Care
Act. Is that
Act.
still now?
3 years ago, I think it was.
That's not a thing anymore?
It's not a thing. No.
Oh, that's good.
No.
Good to know.
Yeah, it is.
Well, I think I understand why they did that, because what people don't understand, and again, I'm ignorant when it comes to insurance, but there has to be money there to pay out. And if they're not collecting enough money to put in the system, they don't have enough to pay out when people need to use their insurance. Is that correct? So they had to charge everybody a certain amount of money to be able to put enough money in the bulk of. So I guess this is me thinking, not knowing. So everybody pays into insurance. All right.
Mm-hmm.
The insurance. All right. Everybody's paying into this bucket of money. I've got a bucket of money to spend on people that are insured through this company. If there's not enough money there, they can't pay out to help people when they go get in a car wreck, or if they break an ankle. There's no money to pay that. So that's just me thinking. But is that the reason why they were forcing everybody to get signed up for insurance, to build up that big bucket of money? Wow. Yeah. So they were penalizing people that said, I'm healthy, I don't need insurance.
Yeah. They basically used that to subsidize the federal fund, because there's a federal fund set aside to pay those premiums for the people.
Right.
Now, if you're making over the amount, of course, you're paying
$65,000 and $1,
and all that money goes to the insurance company. So the insurance company has the pot. The federal government uses their money to put into that, to help put into that pot. So if you don't have, the penalty is it goes to the federal government, and they got that money extra just in case they
put it in the bucket for everybody.
In the other bucket, yeah.
Yeah.
And what that does every year is it raises premiums. There's a couple things going on here. One, the Affordable Care Act, the one thing I love about it is it covers pre-existing conditions. Mm-hmm. So there's no pre-existing conditions. So somebody can call me today and say, Shane, it's open enrollment, or they just lost their job.
I've got diabetes.
Something
like
they
that.
need
Yeah.
insurance.
Yeah.
And I can write them. All right. And I have other options that I can write for the other example, as far as if somebody makes over two people make over $65,000, I have another option, 2 or 3 options that I can go to save these people money. So they don't have to go to the Affordable Care Act. So to get back to the first thing about it, I want to retire, or, I want to change jobs. Don't be scared to change jobs. Call an agent first. Talk to an agent and make sure that agent is a broker. Make sure he has multiple avenues that he can go with, because you don't want to talk to an agent that only sells company A or only sells company B. You need options. So like what I do is I sit there with people and I go through every option that they have. Are you going to get payment assistance? Yes or no? If you're not going to get payment assistance, we need to go to plan B. But if you have diabetes, we need to go back to the original plan, because the second plan and the third plan is not going to cover your pre-existing conditions. If you just have high blood pressure, I'm not too worried about that.
Mm-hmm.
But you can change plans even though you got a pre-existing condition, but it will throw you in a total different.
It could throw you in a different
plan that might not be available to not everybody. I guess you're still gonna insure them, but it's still probably not gonna be the greatest insurance if they got a pre-existing condition.
Correct. So if you're over 65,000, you got to pay full premium, $1,000 a month, right?
Yep.
For the worst plan, $7,700 deductible, which is high. If they got a pre-existing conditions, they're stuck in one of the 2 plans that we were talking about. Okay?
Wow.
They're stuck there because that's plan A. And then plan B would be my secondary, which would be an underwritten plan. So that plan can save people. So if you're healthy, this is a good thing to say. If you're healthy and you're not getting any payment assistance, you definitely want to look at my plan B, because my plan B is going to be 20 to 30% cheaper than anything you can get on the Affordable Care Act or the Obamacare, whatever you want to call it. Plan C would even be less than that. But those 2 plans are underwritten. So if you're healthy, we want to definitely look at those if you're paying full cost. Okay. But if you're not healthy, we have to stay in the other. It's sad.
So my uneducated insurance brain, if
sorry.
you have a low premium, you have a high deductible. And if you have a high premium, you have a low deductible?
It depends on if you get payment assistance or not.
Okay.
So typically, yes. So like the one I have underwritten, if you have a low deductible, you have a higher premium. If you have a low premium, you have a higher deductible.
So they're going to get their money either way.
Yeah.
You're either going to pay a high premium, low deductible, or low premium, high deductible.
It just depends on how healthy you are and how often you're going to go to the doctor.
Yeah.
Yeah. You take all that consideration. So what I do is when I sit down to talk to a customer, I get their names, obviously their birth dates, email address. How much do you make?
Mm-hmm.
How many people are in your household? You got any kids that are your dependents? And then zip code, obviously. And then I run that. And then I also want to get their medicines. I also want to get their doctors' names to make sure the doctors are in the network, because that's another problem that we have. You only have 2 plans. The 2 plans are out there are, I got to say, Company A and Company B.
Mm-hmm.
Company A has a great network. Company B, which is a very popular company here in Kentucky. Very popular. Starts with an A. I should have called it Company A.
Yeah, I know who they are.
They're a great company.
Yeah.
But let's say you have that company through your work, and then now you're retired. You go on there, and what makes me mad is people go on there by themselves and enter all their information. They say, "Oh, there's Company A, the letter A."
Yeah,
I'm going to go with them, and they go with them. It's the worst company right now on the marketplace.
But they go with them because they're popular and they know them.
Yeah, just because you have this company here, or just because that person has this company here, it doesn't mean it meets you. What's going to meet you is what medicines does it cover? What doctors does it cover?
Mm-hmm.
How restricted are they? And things of that nature. So,
we were talking about years ago. We had all of our kids. I think they cost $500 a piece. Your friend just had a baby, and there's no telling what that's going to cost them.
Yeah.
Because it seems like to me, the insurance companies have figured out how much deductible to charge to keep more money in the pot. Obviously, and they make more money because insurance is not a nonprofit; it's for profit.
Well, my friend's paying like $1,100 a month for his insurance through work.
Yeah,
just for him. And now he's adding his child. So I don't know what it's going to go to.
Yeah,
just for him.
Mm-hmm. Just for him.
Well, might be an opportunity. Have him go to WeCareKentucky.com and see if they can get it cheap. So I'm shopping my car insurance around right now. And my question, you talk about open enrollment. So say tomorrow I'm not happy with my insurance. Can I shop around like you would with your car and go get different insurance? Or you can only do it a couple times a year or one time a year?
Okay, you can shop around. Best thing to do would be call an agent,
right.
Broker agent.
But in the middle of the year, can I just decide I want to? Yeah, I'll throw something at you. But can you shop it around during the year like that? I didn't know if you could.
Yeah, but
we have to have everything set by whatever date at where we work, or you don't have insurance the next year.
Yeah, there's what they call special enrollment periods. So if you're losing your job or things like that, you can shop around. If you already have insurance through the Affordable Care Act, you can only shop once a year. There is a special enrollment period going on right now. So if you're already in that spot, you can. But that's only for that. If you're healthy, I can actually take you to that other plan and save you 20 to 30%. Now, when I say healthy, I mean high blood pressure, high cholesterol, that's okay. But if you've got diabetes, or you got to plan surgery or things like that, I can't change it. It wouldn't do you any good because it wouldn't cover it. And I'm not going to do anything for you that won't cover you. Mm-hmm. But I would say, if you're calling me, I would say, I would go over what you have, go over the plans that you have. And then if we can change it, we'll change you if it's right.
But why is that? Why can you only enroll certain times of the year?
They do that with Medicare too.
Mm-hmm.
And this is the government, and they think that's a great idea.
Yeah, my dad gets letters all the time. You can add this plan through October from October to December or whatever it is.
Yeah, so he's over 65 then.
Yeah, well over 65.
So they do the same thing to the seniors. I think what they want to do is control what happens, and they want people to not just decide at the last. Let's say I told you I talked to 500 people
mm-hmm.
during the October, November, December. Let's say one of those people don't enroll, and I've had that happen. I'm just going to roll the dice. I'm not going to take insurance this year because I need the money. I can't afford it,
mm-hmm.
or I don't feel like paying for it. I'm healthy is what I hear all the time. You're only healthy until you're not healthy,
right?
Let's
say with my car insurance, I hate paying car insurance, but until I need it,
be
glad I do.
Yeah,
but so when you go into January, February, March, people now I'm sick.
Mm-hmm.
It's March now. I get coronavirus. I'm gonna have to go to the hospital. Shoot, I need insurance. So what they're doing is they're trying to keep people from doing that.
Right.
They're trying to make people responsible. Which makes sense.
Yeah, it does.
I think what they should do is do their birth months.
Mm-hmm.
That way we don't have to deal with
like your car
500
tags.
people. Yeah, if you did birth months, that would really help.
Yeah,
help the people. It help the agents. I wouldn't be so tired during Christmas time. Things like that.
Well, you hear other countries doing things differently, and I don't know the right answer. Given what we see all the time with people who have cancer, it bankrupts them. Any disease can bankrupt somebody, and it does all the time. So, I'm not sold on, and I might be, as long as it's reasonable. But my problem is if we went to some sort of universal health care to where I can go to any doctor and not get a $20,000 bill in 6 weeks. Is that the right thing? And I don't know the answer to that. My personal opinion is I don't trust our government to do anything right with the money. So if we're paying, and I say that with love, I love I don't love our government. I love our country, but the problem is they're not efficient. They're the most inefficient entity ever. So I don't know that I would trust them managing healthcare and it working correctly.
You're getting ready to make me leave.
Is that a touchy question? It's a statement. That's my opinion. I just don't trust them.
Yeah, you're right. And I don't either. But here's the problem with universal health care. One, right now, you're seeing a lot of people that have insurance because of they're getting so much money in payment assistance. That's already bankrupt. It's bankrupt in our country.
Uh-huh.
I mean, think about this. I have, I said 500. I got probably 250, maybe less, 191, somewhere around there. And most of the people that I have, and that's under 65, okay, the rest are Medicare. Most of those people that are 191 customers that I have are getting payment assistance. Now, their payment assistance probably average about $800. If you take $800 per month and multiply that by just my 191, I don't know what the answer to that is.
I don't either. I'm not a math.
Kelly's good.
I was waiting on it.
191
Let's
times
see.
800 is your average. That's a lot of money that our government is paying for just my customers.
It's $152,000 a month.
$152,000 a month that
Times
my customers
12.
Did you figure that up?
spending.
Oh, you get your phone out.
$1.8 million a year.
Those are just my customers.
That's
That's 191 people. Now, the 800 might be a little bit
Yeah.
more, but
Mhm.
if let's say it's 6, I mean, it's right around between 6 and 8. I guarantee it, because I know some people that I have are getting $1,300 a month, and some people are getting 3. Yeah. So what's that
Wow.
doing to our country?
I don't know. Yeah, it's a lot.
You know?
I said, I don't know the right answer.
Yeah,
I just
and-
know I'm sick and tired of seeing people lose everything they have
But
because they either do have insurance or they don't have great insurance, and it might not cover anything. So I don't know. I don't know the answer. But no, I get what you're saying.
Yeah,
I don't know how you figure it out,
well, what's
because you got people going to the ER that don't have insurance for the flu. And I'm sure that drives healthcare. I would talk to an
drives the
ER
cost
nurse. I talked to an ER nurse once. She said, we get so many people that just walk in because they have a cold, and we have to take them. And they may be insured and they may not be insured, but we still have to take them. That's got to drive the price of healthcare sky high.
Right. Well, what I was going about, and we'll get back to that, remind me, but the universal healthcare, the reason why it's not a good idea, because besides costing
And having a government
a lot of money,
figure it
but,
out, yeah.
but we, I got a customer that needs to have go to liver specialist. Okay, they called in January. They can't see the liver specialist till June.
Wow.
Now, this is not universal healthcare. This is the marketplace.
Yeah.
It's because so many people are out there and there's not
Mhm.
enough doctors. Well, universal healthcare, there's stories about people in Canada, they have it up there, and people in Canada will come, they have to wait so long to go get taken care of.
Yeah.
They come to the United States to get taken care of.
Yeah, I've heard that.
So that's a big problem for our healthcare. Yeah, it's great for the government to give it to us, but are they giving it to us? What are they
Mhm.
giving us?
Right.
They're giving us, we're going to lose time. What's going to happen is we're going to die.
Yeah.
Because we're not going to be able to get to the doctor. Or you break, there's stories from Canada, they break their arm. They can't get anybody to take
To
care of them
reset
up
it.
there to reset it. So they come down here and get it reset. They can have it reset, but it's going to take 2 or 3 months to get to them.
Wow.
I know a lady that's from Sweden or Denmark. I can't remember which one it was. 60% taxes on their income because they have universal health care.
Yeah, that scares me to death.
60%.
Yeah.
So yeah, it's good.
Yeah, because I found out I got to owe federal taxes yesterday, and it put me in a real bad mood. So I can't imagine if that's my that's my problem. I mean, how do you figure out how much to charge everybody to make it equitable across the board,
Right.
and still pay people, what they're worth? Because doctors, are they worth $10 million a year? Probably not, but that's not our choice to decide.
Right.
They set their prices. But we did one of the podcasts the other day. We did, what was it? We talked about it getting sick as a rich person's
Mhm.
game. They got a quote for a heart. You tell the story. They got sick. Somebody here from France.
Yeah,
got
the
sick.
dad was here from France or whatever country it was. But they were here visiting something, and he had like a minor heart attack, and so he needed to have surgery, but it wasn't immediate. And the U.S. was going to charge him $150,000 for this procedure. So they called a friend back home in France, and they talked to a heart surgeon, and it was going to cost $15,000 there.
Right.
So then they told the U.S., wherever they were at, New York, I think, somewhere. And they started negotiating. They said, well, we'll charge you $50,000 for it. And he was like, no, I'm going to go back to France and have it done. Well, we'll charge you $25,000.
It's like he was
Like I don't know how you can.
bartering the
Yeah.
price for your heart.
Yeah.
So that's the kind of stuff that
So
I think
sad.
if we could
Yeah.
figure that out and get that kind of, to me, that should be illegal. But if you get that kind of thing under control, and I'm not one for telling people how much they can make. I believe you make what you can, but if we can do a surgery for 150, then cut it in half and then drop it down to 25 in a matter of 3 days.
Happens all the time.
I know, that's my thing. But if we can get that kind of thing under control, maybe insurance won't be so expensive. I don't know. It's just the craziest thing I've ever seen, that how our world has turned on stuff like this.
Well, there's a lot of free things out there. We're giving away. People they're not responsible, so they don't get insurance, and then they have something happen, and then they go to the hospital or whatever, and the hospital obviously is not going to turn them down. And sometimes they'll do it for free, depending on what your income is. Now they're going to, that's why we have health insurance, is, so we're protecting our houses and we're protecting our assets. But if you don't have any assets, what's there to protect?
Well, I think that's one of the other problems, that if we could figure out how to fix that, because there's so many people that don't pay for insurance premiums, but yet they still show up at the ER and demand that they demand care.
Right. If
they're not paying into the pot, I don't think anybody should die. They should be taken care of. So how do you fix that? I mean, there's just so many unknowns, because you got immoral people doing procedures that they could have done for a tenth of the price. And then you've got people that refuse to pay into the system but demand care.
Right.
Again, I think it'd be great if you get everybody in the country to pay $500 a month. It might fix our problems. But how do you do that? How do you make people do that?
Good luck.
Yeah, I don't know.
We're paying more than that.
I get hit on this all the time, and I don't understand the difference between Medicare, Medicaid, and you had mentioned once, you and I were talking about somebody that was on Medicare, but still they had tons of bills because of their cancer, and you said that they have a supplement. I was like, what's that mean? So even if you're covered, first of all, what's the difference between Medicare, Medicaid, and why would you need a supplement? If I've got one of those, am I not covered for everything?
No, Medicaid is a program made for people who have low or limited income.
Okay. So anybody, you don't have to be a certain age.
Correct.
Just low income or no income. You could get, is that like Passport?
Yes.
Okay.
Yeah.
Well, I knew something.
You did good. You did good.
Yeah.
Yeah, Passport. And there's multiple. Anthem has one. Humana has one. Passport, WellCare. There's like 5 or 6.
So that's based on household income.
It's all based on household income.
We had somebody the other day, she said, you know what? We can't get married because if we get married, our income's going up, and then I lose my passport insurance.
Yes.
That's insane.
So here's my little snippet just on that real quick. So my mom got sick 2015, right?
Yeah.
Never had health insurance because the company she worked for 20 years, she couldn't afford it. So when she got sick, we got her on the Affordable Care Act. All that was good. She was on Medicaid. She was getting treatment. It was fine. I went away to EKU. Remember, I came back and I told you this before. I started serving, just making whatever extra money, and they took her food stamps away because we made too much. I think I made $80 extra that month or something like that. Mm-hmm. Well, they came back and they said, Kelly has to move out or you're going to lose your Medicaid because it's income based. And I came home to take care of her and help pay for bills. And that put me over the income.
So you doing the right thing, turned in the income when you should have stuck the cash that you made off tips in a coffee jar.
Right.
And you wouldn't have had that.
So I'm literally we're on the phone with this insurance agent, and she said, you have to move out. So I had to change my address and everything.
You didn't have to move out, just had to change your address.
Right. She said, move out. This is the insurance lady telling me that. Thank God she did. Because like I said, my mom would have lost her insurance because I put us over that income level.
So we have laws, but we're forcing people to do things unethical, I guess you could say, to try and make it right.
I had a customer. It's the same part of this. I saw on Facebook that they were getting married.
I'm going to look, see who that is.
They're all excited. This has been a few months, right?
Yeah.
So they're all excited. He's excited. He asked her to marry him. She's all giddy and stuff like that. Well, I had to talk to her again about something else. She works at my bank. And I was talking to her and I was like, look, I wanted to tell you and your fiance together. But if you get married, he's going to lose his assistance for his medicines. Mm-hmm. The guy has a lot of medicines that he takes, and he's on Medicare because of disability. But his medicines are pretty high. Some of them are cheap, but some are $400 or $500 a month, right? And if they get married, but he's only paying $8 for this $500 medicine. But if they get married, he has to pay the $500 for the medicine. So I wanted to tell them together. I ended up just telling her.
Did they get married?
Not yet. I don't know if they're going to, and I don't
That's
think they
insane.
will.
Well,
But
that's what happened to me and Drew. We got
Yeah.
married so my mom could be there, before she passed and all that stuff. And I was always on Medicaid. Like my parents were below that line. My dad's on Medicare for
right.
being over 65. So when we got married, I was losing it because we were over the income level. So Drew had to find a job where he could have insurance for the both of us.
Yeah.
Or I'd be without insurance.
Yeah. I mean, it's worth looking into, I
Mhm.
mean, like you said, your mom didn't have insurance forever. And then when she got sick, you looked at for, you looked at the Medicare or whatever. It's worth calling and talking to me or whoever, an agent that's a broker that can guide you, even if you don't think you can afford it. Because if you call me, we go over your options, and if it's too high, it's too high.
So do you sell supplements?
Yeah, I sell supplements.
Because maybe I should call you because my dad's supplement is insane. Like I feel like half of his Social Security goes to insurance.
Yeah, you have Medicare,
Mhm.
and you have a Part B premium, which is your Medicare premium, and then you have a supplement on top of that. It's kind of where you were talking about a while ago. My supplements, there's supplements and there's Advantage plans. Supplements will pay pretty much everything that Medicare pays for. So if you have anything happen to you at all, any hospital stay or anything, it's paying at 100%. You don't have a bill. If you have Medicare and you have a Medicare supplement, the only thing you pay is a $203 deductible per year.
So
If you have the right plan.
Because Medicare is like 80%, right? And then the supplement picks up the extra 20.
On Part B, yes.
Yeah.
There's a Part A and a Part B. That's going to be way too
So
confusing to talk to.
it's so confusing, all of
Yeah,
it.
but there's an A and the B. A is pretty much just hospital.
Right.
And then B is doctor's office visits, surgeries, wheelchairs, and things like that. So if you got a supplement with with A and B, the whatever whatever Medicare doesn't cover, the supplement will cover if you go in the hospital. So my customers that have my supplements, 100% coverage in the hospital.
Mhm.
Outside the hospital, surgeries or anything like that, it's only $203 deductible, and it's paid for at 100%. So there's no, you don't have to worry about your health insurance.
Well, then can't you throw in like, was it Plan D or something for
Part
prescription?
D is,
how do you know all this?
I have very old parents. I had to learn some of this
I
stuff.
don't know any of this stuff.
But I mean, that's my dad's whole check, literally. Like if we added all these little extra supplements that would cover, like he can get vision care now, he can get, hearing and all these things. Like that's his whole check.
Does he have a supplement or Advantage plan, or do you know?
He has a supplement.
Okay. Supplements are more expensive, and then every year there are rate increases. The problem with supplements, or people who sell supplements, they sell for commission, me as well. So what a lot of people will do, they don't care about how your rates are going to raise. They're just going to sell you something a lot of times that they're going to get paid more commission on. So they may sell this other company because they get bonuses.
Even though it might not be the right thing.
Even though it might not be the right thing.
So when open enrollment rolls around, I should go to Medicare Advantage.
It's possible. You can talk
Instead
to me.
of a
I sell Advantage
So
too.
what's that? What's
But-
Medicare Advantage?
Medicare
Cheaper than
Advantage-
supplements, it sounds
So
like.
hold on. We got Medicaid. So if you're under, which is Passport, is that another name for Passport?
Passport's
No.
under 18, right?
Passport is just a popular name, and you're just pushing it out there because you see the commercial.
That's all I've heard.
Yeah, it's just she may have had it. I mean,
All
a
right.
lot of people will
I
say
had it, I
got-
think, till I was 18
So-
or something.
Yeah, instead of saying Medicaid, people say I got Passport.
And
Right.
it's the same thing.
And Passport's very popular in the Medicaid community. Yeah, it's
All right.
yeah. So
All right. So if you're in a certain level, not under certain
low income,
income, you can get Medicaid.
correct.
When you hit a certain age, you can get Medicare.
65 and over.
So
Or disability.
Medicare basically doesn't cover anything unless you buy a supplement,
Now, Medicare covers fairly decent.
like colds and flus and.
Yeah, I mean,
But if you got anything major, if you don't have so do you get? I mean,
get it.
what do you need? Just say I need a supplement, and you'll get whatever you need, or is it like a vision supplement, a hearing supplement, a cancer supplement? Is it? How does that work?
Medicare supplement. If you have a Medicare supplement, it covers anything that Medicare doesn't pay. So Medicare pays pretty good in the hospital, but outside the hospital, if you have an outpatient surgery, say a hip surgery, it's an 80-20 policy. So the Medicare will pay 80%, and you have to pay 20%. Well, $80,000 surgery, a hip surgery,
16
it's
grand.
16 grand. So you get a
Didn't figure that one
supplement.
up, did
Just
you?
blew my mind. I don't know how y'all did
You
that.
get a supplement. I use that number every time
Oh
I
my
talk to
God.
somebody.
Okay.
I use hip surgery every time I talk.
I'm quick. I was doing that new
He's-
math before the
he's
new
just
math
quick.
came in.
Yeah.
He's like,
I know.
but yeah, that's Medicare would pay 80% of that. So the supplement will help
with the
take care of that
20%.
20%. Or if somebody gets cancer,
But I would
it's going to pay 100%.
But I would bet, and I didn't know. I mean, you and I were talking about something, and you said, did they have a supplement? I didn't know you had to have a supplement. I wonder how many people don't know that you have to have a supplement.
You don't have to have one.
I know you don't,
You
but
should have one.
but at a certain age, I mean, everybody's getting knee replacements, hip replacements, back surgery. Everybody's doing this stuff anymore. Right. It's almost like it's bougie to have some sort of crazy.
Oh my gosh.
I had to use that word.
Gosh.
But it's almost like it's cool to say I had knee surgery, but it's expensive.
Very expensive.
Do you need knee surgery?
I think I do, actually.
You complain a lot.
I'm getting close.
Mine's the hip.
That's why we're collecting wheelchairs, because I'm going to need one here before long.
Oh, I have to wheel you around.
No, we got 2 electric ones. You got one for left hand and one for right. That's right. We can start Shirley's Way wheelchair races.
We can have a little.
Yeah. Well, these are so you can soup them up. They're electric. You can hit them with your hand. Yeah.
Take the governor off of it.
Yeah.
Just let it rip.
Yeah, see, car person over here. Are we talking about jetting a wheelchair? But I mean, I don't even know where we went with that. But I mean, how do people know? But didn't you just mention Medicare Advantage?
Medicare Advantage.
What's that?
Medicare Advantage takes the place of your Medicare A and your B. What they do is basically like a company takes over the A and B, and they are now your healthcare provider. So let's just say it's that company A. That's the Medicare Advantage plan. Now you have to ask that company every time you go do something. So if you want to have a surgery done or something like that, you got to make sure it's okay with that company. Medicare no longer has anything to do with it. You can get those plans for free. $0. Sounds great. You can see them on advertising all the time. They offer you dental, they offer you vision, they offer you this and that. But really, it's kind of a misconception or a misrepresentation.
Because misconception in insurance?
They give you a little bit of dental maybe and a little bit of vision maybe, but that's the trigger word they're hearing is a trigger word. So people will change from a supplement to an advantage plan. Now, if a supplement's really expensive, I would maybe talk somebody down and say, let's go to an advantage plan because at least they have a most out of pocket. Most out of pocket really helps because let's go back to the hip surgery. Medicare will cover it with the supplement will cover it at 100%. An advantage plan will cover it up to the out of the pocket limit, which could be anywhere between $500 and $6,500. So it's not as painful. People, it's the most out of their pocket would be $5,000 or $6,500, depending on what plan they have. The problem is if something happened to me in October and I had $5,000 or $6,000 out of my pocket, and then my plan renews again in January, and something happens again, that's $10,000 if it's $5,000.
So if you get late in the year, it's best to wait till the following year, so you don't have to pay 2 deductibles.
No, people do that. People try and hold off.
That's not a deductible. It's just
what you have to pay out of pocket.
Yeah, because like chemotherapy, it only pays 80%. So if you go to chemotherapy and you have an advantage plan, you're paying 80% or 20%. If you have the supplement, you're not paying anything.
We need to get that word out. Yeah. I don't think people know that.
Is there are you allowed to say what is a high supplement?
A high price supplement?
Yeah.
Well, the problem with the supplements is they go up every year.
Mm-hmm.
So like me, I know I have a lot of different companies that I use.
Mm-hmm.
Okay. I got 5 or 6 different companies I can sell you a supplement with. I only use 1 or 2 of those companies. And the reason why is because the other ones have high rate increases. So me as an agent, I've been around for 10 years. I know which companies have the higher rate increases every year because that pool you're talking about, that bucket, if you're one company and they're not throwing that much money in the bucket and you got 10 people or 100 people throwing money in the bucket, and then you get somebody with cancer, what's going to happen to those rates next year?
Mm-hmm.
They're going to sky up. But if you're a big company, you got 230, 300,000 people in the bucket and somebody gets cancer, it doesn't hurt as bad.
Right.
So your rates will go up, but they won't go up. You got inflationary rate increases as well. So it won't go up as much. So definitely not going to say the name of the companies. That way people can't just go out and buy it without calling me first.
Yeah.
But that's what I look at. I care about my customers, and I'm trying to take the risk out and help them keep some of their money as well. And then every year is Part D, which is the prescription part. Every year I call my customers. These things don't make me any money at all. I get paid just very, very little for doing it. that I call every single customer and go over their medicines with them, because every year these companies will change what they cover on these medicines. Some people I hear all the time, they're like, oh, I'm okay. I like my drug plan this year. I'm only taking the 3 medicines still. If they don't change, it could cost them an extra $400 or $500 to $1,000 a year in the prescription cost, because the prescription companies know that people over 65 years old, they don't like to change.
Mm-hmm.
They don't want to change. It's a pain to change.
My dad would have no idea what he had if it wasn't for me. He
Yeah.
still doesn't know.
It's really not a pain to change, but they feel like it's going to be.
Yeah.
They feel like it's going to be a struggle. They don't want the pressure of changing.
Mm-hmm.
They don't want to have to deal with it, and that's why I call my customers every year, because I care about how much money they can save. You know, and then these people, the companies, they know they won't do
Mm-hmm.
it.
I just think our medical system in general, and it sounds like insurance, tries to keep things complicated. So you have a hard time understanding it. And then at some point they've got you because they can kind of charge you whatever they want for procedures or things like that. I don't know why you can't have, if I walk into the Waffle House, I can get my hash brown smothered, covered,
Sounds good.
chunked, all that stuff. And it's on a menu. I know
Right.
what I'm getting. Or I can get the skinny version. All right. I'm not getting all that stuff. I'm just getting hash browns. Why can't they say, all right, here's your options. If you're healthy, you've got these options and you can get a supplement. If you're under 18, you can get this. And if you've got some medical issues, this, and it may be laid out somewhere like that, but it doesn't seem like it's laid out for a lay because I'm still confused. I don't even know what it is.
Right.
I'm more educated on it now. But again, if you're confused, WeCareKentucky.com and Shane can help you with that. But it just really seems like, just like anything else, they try to keep you confused. And you just say, you know what, just do what you can for me. I don't know, maybe I'm wrong. It just seems like confusion is the best answer, because then at one point you just don't know what you're paying and you get in a situation.
Yeah. I got to bring this one up because I was thinking about it. It's been heavy on my heart. I've had.
We going to pray?
No.
Okay.
I got a customer that wants to change their insurance, and I'll give you an example of a different customer. But I had a customer that was with the Gold plan, and
is that Medicare Gold?
That's the best plan in under 65.
Okay.
So it's the Gold plan.
Medicaid Gold.
No, it's regular health insurance Gold, and what that means is they have a $2,000 deductible. It's
a one in on me.
All it's right, a $2,000 deductible.
All right.
With a $6,500 out of pocket. So the most it can come out, if you got insurance, the most it can come out of your pocket is $6,500. Mm-hmm. But you pay a whole hell of a lot for that. You brought that up a while ago. They have a low deductible, so they're going to pay more in price. Mm-hmm. The Bronze plan is a $7,000 deductible with an $8,500 out of pocket. Okay.
So okay, go ahead. I'm going to ask you this.
$8,500 out of pocket.
Yep.
The Bronze plan for a cancer patient is the best plan to go with. Tell me that's not messing with your head. Because they're getting payment assistance. Even if they weren't getting the payment assistance, it'd be the best one. But the math, here's the way the math worked. The Gold plan was $434. The Bronze plan was $79. This is after payment assistance. If you max out, which this person's going to max out, the Bronze plan with the $7,700 deductible was still the best plan, money-wise. The reason why is because the difference in prices was $300-something. Mm-hmm. The difference in out of pocket was only $22,000. So it ended up saving them $2,000 by going with the Bronze plan. The Gold looks better because it's a $2,000 deductible. The price don't look better, but you're thinking, gosh, I got cancer or I have to have these surgeries. I need the best plan to go with. I need the $2,000 deductible. That's not the best one. The best one was the Bronze because they're going to be the least money out of your pocket.
Plus, you're paying an extra $3,600 a year for premiums for this Gold plan.
It's all about math.
Yeah.
Yep.
So why does they make the math so confusing?
So you're confused.
I know that's exactly what I'm
getting at. Because they want you
to
buy the Gold.
Yeah, that's what I'm getting at. They make it so confusing. It's like going to the grocery store and milk on this aisle over here is $1.09. Can you buy milk for $1.99?
I think so.
I
Kroger
don't know.
runs
I
a
don't
special
remember.
They
sometimes.
call
So
my wife.
the milk
Yeah.
over here is $1.99, but if you're on this side of the store, they got coolers and it's $2.19, and nobody thinks to walk on the other side of the store. It's a confusing mess, but it's designed that way, is what it sounds
Yep.
like.
Yep.
Wow, I don't.
It's exactly the way it is.
Well,
That's
what I
why
was
it's
gonna-
good to talk to a broker.
Yeah,
You know?
just because what I was going to ask you when you were in the middle of that is you said one plan was $2,000 deductible, max $6,000 out of your pocket for the year.
Correct.
Why don't they just make it a $6,000 deductible? Because that's what you're going to end up paying anyway. So if I go to the
right.
doctor today and I have hip surgery, the max I'm going to pay on that hip surgery is $2,000 because that's my deductible. If I go and have a toe replaced 6 weeks later, I'm going to be out $2,000 more because that's a total different surgery. So that's $4,000 I'm out. No?
No, it's
Is that not what? Why don't they just say $6,000 deductible? Because that sounds so confusing. Your deductible is $2,000, out of pocket $6,000.
right. So what you do is if you have to have a hip surgery, it'll start paying once you have $2,000 out of your pocket. Well, a hip surgery is $80,000, so you're never going to be between 6 or 2,000 and 6,000. You're automatically going to hit that top out of $6,000.
But why
That's
is
what
it
you're saying.
max the year $6,000? If
It's-
I go
it's-
in for a different procedure, I have a total different deductible again.
No, you don't have. If you could have 3 or 4 procedures done in the year, the max out of your pocket for the whole entire year is $6,000.
Where's the other money come from then? If I got a $2,000 deductible, what else do I? That's what I'm trying to figure out.
If you have a $2,000 deductible, your plan will not pay anything until $2,000 is out of your pocket. So
Right.
you give me $2,000 and then we'll get your procedure done.
Yep.
Say it's an 80-20 between 2,000 and 6,000. So you're paying 20% until your max out of
Got it.
pocket is $6,000.
Okay.
Then you don't pay anything else. That's why when we had those conversations and I asked you about, does this person have health insurance? Yeah. Well, most health insurances have out of pocket maxes. So that's why I always was kind of questioned you or questioned us as far as what we were paying for people. But they may have a $7,000 deductible, and that's huge, especially if you got cancer and you can't work. You know, I mean, how are you going to meet $7,000 or $8,000 out of pocket?
Well, I never understood it till you just did that.
Yeah.
It makes sense now. I'm thinking
we talked about it.
if I,
we were having Cokes.
Well, yeah, that's true. There's probably something extra in the drink, but if you think about it, it's just so confusing. So that's what I was thinking. All right, I've got 3 things I need to have done this year: my shoulder, my knee, and my hip. I'm going to get my shoulder done. All right, I got to pay $2,000 deductible, get my shoulder done. 6 months later, I'm having my hip. All right, I'm out another $2,000, but that's not the way it works.
Nope,
no, that's what I'm getting at. Yeah,
right.
That's not the way it
It's
works.
progressive.
Yep.
So
okay,
once you hit the 2, but yeah, if you're going to do something like that, have it all done at once.
Wow.
At the beginning of the year.
Do it all. Yeah, do it all when it starts over. You know, if you're like, I got to have hip surgery, I got to have knee surgery. Let's do this in 2022.
Yeah.
You know, and that's sad we have to be that way.
Well, at some point, I'm not old, but Kelly thinks I'm old. But at some point, I'm sitting here thinking, all right, in the scope of life, I got to start adjusting of when my corporate insurance might end and what I need to have fixed under corporate insurance before I retire.
Right.
I'll get 3 things fixed under corporate insurance before I have to start paying my.
A lot of people do that.
Yeah.
Mm-hmm.
Yeah, a lot of people do.
All right,
that.
I need to start making a list.
And that's something, again, people call me about, or you can call me about, and I look at it and say,
when you're retiring, you need to have that done now.
Yeah.
Yep.
What do you have? And I ask people that. A lot of insurance agents won't ask. They don't care.
Wow.
They just want you to sign up with them and make the money. But
Well, hence the name, We Care. You
Mhm.
actually care about them. So,
yeah.
yeah. Well, that's incredible. Well, I'm sure we've confused everybody today. This will be on a podcast, which will sit out there for a while. But you said there's some supplements. I'm trying to see the date on my watch. I can't see. But isn't there something going on right now? You said another open enrollment for a special period or something. What's that about?
It's the president gave open enrollment.
The new president?
Special enrollment period for February 15th to
God
March
bless him.
15th.
Yeah.
Well, there's already a special enrollment if you lose your job.
Okay.
So that was the reason to do it. But there's always a special
Because of
enrollment
COVID?
through the whole entire year. You can lose it because of anything.
Oh, okay.
That's what he said.
Yeah.
But if you ever lose your job, all you have to do is call an insurance agent and you can get insurance because that's a special enrollment period. It's a job loss. You lost your health insurance. You got 60 days to do that, to make a change. and to get that, or you can take Cobra, whatever's best.
Well, I was going to ask about Cobra. So we've got Medicaid, Medicare, supplements to Medicare, Medicare Advantage, Gold, Bronze, and Cobra. What's Cobra? I was about done with the questions, but I had Cobra, and then you mentioned it. So where's Cobra come in?
Cobra is, say you're a ground foreman and you decide to leave, or an employee, employer and terminates an employee. I don't want them to exit you.
They open me up for other opportunities.
You're gone. Cobra is then offered to most people.
Is it temporary?
It depends. It's about 18 months, but it's expensive.
Yeah. So I know. I hear people talk about it a lot.
Yeah. I had somebody call me the other day, and their Cobra single person was going to be $800 a month. Mm-hmm. Okay. And that's why it's so complicated. Cobra is $800 a month. It was okay insurance, but they weren't going to get any payment assistance. So the price of the worst plan that I could give them was $700 a month, which is only $100 difference. So now my question, okay, well, what's your health like? You got good health, bad health? She's healthy. Yeah, you may want to do the same. Puzzle together when it comes to insurance, and a lot of people don't make moves because of that. But Cobra is just offered to you. You got 60 days. It's just an extension of your private health insurance that you have through your company.
Oh, okay. Well, that makes sense.
And then but most people will call an agent and get that something else. I mean, I write up Cobra people all the time because it's just so.
But it's extending your existing coverage from the company you're leaving from.
Yeah, it doesn't change. Your deductible will stay the same. Your copay stay the same. Your coverage on your prescription stay the same. So everything stays the same as you currently have it. And you got 60 days to say you want it or not want it.
Huh.
But you get terminated, then they don't send you a letter out for 30 days.
Yeah, now you only have 30 days to.
Now you got another 30 days to approve it, to say okay or not. So.
I don't know,
but yeah, it's and if you got a small employee or small employer, they may not even offer Cobra.
So this came to my mind the other day because I consider us small, but it a certain, what's the law? And there may not even be in a law, and I may have heard this and thought I heard it, but if you have a certain amount of employees, do you have to provide insurance for your employees?
It's 50.
You do small business plans, right?
Yes.
Okay.
Yeah, I do small business anywhere between 2 and 50 people. 50 or more, you have to have.
So it's 50?
50, yeah.
Okay.
They may have changed that to 100, but I don't deal with anything 50 and over anyway, so I don't.
We're not there, but it hit me the other day. I was like, man, at some point, are we going to have to start providing insurance for people?
Nah, we'd have to have a lot of people.
Okay.
But it may not be a bad idea, but it just depends. A lot of times when I look at group policies like that, I look and see if most of their employees, if you as an employer offer group insurance to your employee, that doesn't affect their spouse. But if you offer it to their spouse as well, then their spouse doesn't qualify for payment assistance anymore through the federal government. It's a stupid law.
Well, wasn't there something too, and I might be wrong, that if you're married and like each of you, your workplace offers insurance, you have to take it?
Yes, that's what I'm talking about.
Right. Okay.
If your employer offers your spouse's insurance, you have to take that. You can go on the Obamacare or Affordable Care Act, but you have to pay full price. And here's what happens. So the employer will pay half the premium for the employee. Say it's a $400 premium. There's a small group. They'll pay $200 of it. The spouse is paying $200. I'm sorry, the employee's paying $200 and the employer is paying $200. The spouse maybe another $400 or $500.
Mm-hmm.
So now they're paying $600 a month for their health insurance. The problem is that if they didn't offer it to their spouse, they would be able to get payment assistance if their income's low enough, and they may only have to pay $100 through the Affordable Care Act. So you got to be really careful with that. That's getting kind of heavy and kind of into.
But again, wecarekentucky.com. You can help them with, because it's so confusing. Because where I work and my wife works, they both offer insurance. Well, she declined it where she works, and she's on my policy. And couple years ago, they decided, it's like, all right, if your spouse is on and they have it they could get it at their location, we're going to charge you $100. And I don't remember if it's $100 a month or $100 a paycheck, but they charge me now because she's on my insurance.
Yeah,
seemed like a scam to me.
A married couple, I'll usually always recommend looking at it, but first, obviously, but I would have my own policy. If my wife worked and she had her own policy through her work and I have my own policy through my work, then I would tell her to get hers and me to get mine, because it's going to be least money out of the pocket. Even if you have to pay a higher deductible on her policy, because what are the odds you're going to use it? You may not use it anyway.
Yeah.
Insurance is just there if we have something catastrophic coming anyway.
Right.
It's not to pay for your knee getting bruised.
Well, that's the way it used to be.
Pay for your hip surgery.
They paid for everything, and they've kind of backed off on that. Yeah, and they're having you foot the bill unless it's catastrophic, is what it sounds like. So. Yeah,
I mean, it's there's a lot of moving pieces in a small group policy, but that's one thing that I make sure that isn't going to happen to their employees, because I've had people buy their employees' insurance, offer it. They never offered it before in their life. They think they're doing a great job. Now, I didn't sell it. Somebody else did. It's just something I heard. Employers all like, yeah, this is a small group. They got 20 employees. I'm doing a great thing for my employees. I'm going to offer insurance to them and their spouses. And they're all mad because now they're paying $600 a month when they were only paying a couple $100 a month through the Affordable Care Act. So now their employees are mad at the employers for offering them insurance.
That's what I'm thinking. Like, it might be best if you don't offer insurance.
Yeah, I know.
You can, but look at it. As a small group, you should look at it and look at the goods, the bads, and the uglies, and you should have an agent that can kind of guide you and protect you from that. I got a large group up in Northern Kentucky, and that's what I told them. I got like 20 something people. So you don't want to offer their spouses insurance. They're all construction guys. A lot of their spouses don't work. Some of them do a little bit, but most of them are getting payment assistance, and as far as their spouses, let's not put them in here.
At that point, it's cheaper just to increase their salary by what their premiums are and help them pay that versus offering the plan.
That's illegal.
Well, they don't call it that.
Yeah, it is illegal.
This
don't
year,
know how you can get caught.
Sorry. This year, instead of 5%, I'm going to give you 7% because you're a great employee, and that extra 2% covers their premium. So
yeah,
but I agree with you. I knew there was a law. I thought there was a law that during the Affordable Care Act that said if you have X amount of employees, you have to provide them insurance. But I didn't know if that was true or not. So
it may have went to 100, but I think it's 50 and above.
Yeah.
And I don't.
Again, my brain wandering this weekend. I've had a lot of things to think about, and that hit me on top of. It's like, man, what number are we at? So, man, thanks for coming in today. Hopefully, we educated people. If you're interested or in need of insurance, get hold of Shane.
Or if you're confused even more now than you were.
Yeah.
Because it's a lot. It's a lot to go through. I'm happy to help. I'm free.
Yeah.
My advice is free. If I think you should stick with the plan that you have now, I tell you.
Yeah.
I'm just open and honest with people. I'll tell you what I think, and you don't have to buy anything. If you don't want to buy anything, don't buy it. I don't twist anybody's arm.
Honesty is hard to find these days. So wecarekentucky.com. Reach out to him. Got a number for anybody to reach out to you at? Or
502-365-5503.
Cool. Good deal. Well, thanks so much for coming in. Kelly, how can people support Shirley's Way? We got to cover this every week.
We do. So for 2021, we are pushing for 1,000 $10 monthly donors. You all do the math. $10,000 a month, $120,000 a year.
I know the math.
I know, right? But that would help out a lot of people in our community. And we would love to have you as a donor. So $10 a month, go to shirleysway.org. Get signed up now.
Yeah. All right. Thanks for tuning in, and we'll talk to you next time.
See ya.
Thank you.